Well, Jim, we've been discussing about stocks struggling to find their footing, and a big reason is short squeeze action.
Well, I think that one of the things that has now dawned on people, last summer the SEC changed the rules, no more uptick, and they used it as a slippery slope. They said, well, listen, we're allowing ETFs to be banged down. We should allow stocks to be banged down. I think this was classic bull market logic by the SEC. It's almost as if they were owned by hedge funds. Of course, no one owns the SEC, and I'm trying to be a diplomat here. But what I recognize is that you can take any stock down. Let's take the rate on Lehman yesterday. You come in and you buy all the July 40 puts that you can.
Right.
And then you just go out and you start saying that Lehman's having problems with prime brokerage. And then you slam the thing down from all different sides. A bunch of hedge funds come in, do a gang tackle, each sell 500,000 shares. They wait until 3:30 when the buyback's not there.
Right.
Is that capitalism? I don't regard that as capitalism. I regard it as the destruction of capitalism. Now, last I looked, the SEC was on the side of the investors, but they've completely defaulted that. They're on the side of the hedge funds. How did the SEC decide to get in league with short-selling hedge funds?
So
this is a Republican administration. What happens when the Democrats come in?
What does the average poor investor, the average Joe who owns Lehman Brothers, they're sitting by and they're watching this destruction of capital, and specifically they're watching the destruction of the capital that they own in Lehman Brothers. What do you do?
The average Joe has to protect himself from the SEC and the short sellers. The average Joe has to go in and own stocks with dividends, diversified portfolio, own the stocks that the short sellers can't target because they have to pay the dividends, and push the SEC to revisit this moronic policy that is just absolutely playing right into the bear market hands a la 1932 in this country. But then again, the government does have a Hoover feeling about it. I've said over and over again that short sellers have been trying to create a wholesale collapse of our financial system, all in the name of making an extra buck. I've outlined how the shorts go after the bank stocks with their decisive battles of encirclement and annihilation. How they came close to destroying the American banking system with their rapid-fire machine gun selling, now that the uptick rule has been repealed by the SEC. A rule put in place after the great crash that forced short sellers to wait for a stock price to go higher, what's known as an uptick, before they can unload their selling again. Sell. But you know something? There's still unbelievers. There's still those who think that the shorts had nothing to do with the tremendous declines in these stocks. People who think that short selling is no big deal, including our SEC. Well, now I got some numbers. The truth and the proof of just how pervasive and damaging the relentless shorting of the banks has really been. This is very contrary to what you heard, including what I was asked about recently on Stop Trading. This should be a bigger scandal than Madoff's alleged Ponzi scheme, because the shorts truly did come close to sabotaging our financial system.
Hi, I'm Don Harold. How are you? This is Saturday, April the 24th, 2010. This article is entitled, Are Short Sellers to Blame for the Financial Crisis? This is September 18th of 2008. Now, I have to take you back in time. You may recall that all of the Wall Street bulls were looking for a scapegoat to explain why the market was tanking through the floor. Now, one of the easiest scapegoats was short sellers. And one of the champions of the short sellers causing the market to implode theory, one of the champions of that was gentleman Jim Cramer. In fact, this article at time.com, this is a time.com article, contains a quote from Jim Cramer that really sums it up. He says that Chris Cox, that was the then SEC chairman, is responsible for the largest destruction of wealth in U.S. history. That's a long time. Quote, because of Cox, the shorts won. So you've seen Jim on video a couple times. You've seen him here in print at time.com. And you know what? If you go to Google and search for Jim Cramer short sellers 2007, 2008, you'll find hundreds more articles. All sorts of video where Jim Cramer is blaming the shorts for taking down the financial sector, taking down our economy. Well, what I'd like to do right now is I'd like to ask Jim a question. You know, I'd like to reach across the aisle and ask for a little cooperation. Because it's been said that the real tipping point to our economy, the tipping point to the banking crisis, was when Lehman went under. Well, check this out. Goldman Sachs implicated in shorting Lehman shares. Subtext, Goldman Sachs has been drawn into a fresh controversy as lawyers demand to know whether it was partly responsible for triggering Lehman Brothers' downfall by shorting its rival shares. Well, I'll tell you what, this article was at the Telegraph in Britain, Great Britain. I think what you could it'd probably be okay to change the title of this article from Goldman Sachs implicated to Goldman Sachs shorted Lehman into the ground. That would probably be a better title of this article. Of course, only time will tell. More investigative journalism to follow. But here we are in 2010, and not only is Goldman Sachs implicated in shorting Lehman shares, check this out. Goldman emails as of Friday show how the crash turned into cash. Now, how'd that happen? How did Goldman make money in the crash? Well, if you read the article, what you find out, remember, Goldman Sachs was selling investors investment vehicles that would go up if the housing market rose. Well, of course, Goldman Sachs, we also now know, was shorting the very same housing market. And Goldman executive Donald Mullen was super happy. Quote, "Sounds like we will make some serious money." You can read this article, and you can read all sorts of, you can watch all sorts of videos, and you can read the blogs and go on YouTube and check out the angry truthers out there trying to get to the bottom of this. But what I want you to do is I want you to contact Jim Cramer and ask Jim Cramer about his buddies at Goldman Sachs. Seems to me that if Jim Cramer is so interested in helping the little guy and helping the Cramerican get back to even, what he ought to do is get behind this investigation of Goldman Sachs. Because if it is true that these short sellers, the ones who are selling these banks short back in 07 and 08, if they were the ones behind the financial meltdown, well, how much more evil and vile and wicked are Jim's buddies at Goldman Sachs for short selling the American people and the American pension fund holder and the widows and the orphans and the firefighters and the teachers, as Dylan Radigan so rightly points out. How about those people? Where's Jim on this? I want to hear Jim Cramer come out tomorrow morning on CNBC and beg for more investigations into Goldman Sachs. I want to see Jim Cramer come out on Stop Trading and on Mad Money tomorrow night and explain how sad he is that his buddies, his partners, and his friends at Goldman Sachs put the screws to America. Goldman Sachs emails show how crash turned into cash. It's nauseating. Where's Jim Cramer on this? Where's Jim Cramer now, Cramerica? Hey, Cramerica, who cries for you?
This should be a bigger scandal than Madoff's alleged Ponzi scheme because the shorts truly did come close to sabotaging our financial